Mm, Welcome everyone to LeapMeet 71, June 2022 TradeLog review and interactive Q&A session. What a month we have had, right? Very challenging. The market has already been very challenging, and on top of that, June was even further more so, where we saw a bear market going into the market going into bear market territory for a little bit and bouncing all over the place. The range was quite unusual as well, and I will show you what I mean by that. All right, let's take a look at the market really quick first, and before we go into the trade log. So here's June 2021, right here. Pulled back, made decent high, but very, very smaller range, and then huge pullback again, and then recovered from it within probably 3 days period, 4-day period, and ended the month on a higher note. So that was the entire June right here. If you look at the range, it was about 428 to 414. It's about 14-point range from lowest of the month to highest point in the month. So now, remember, that was when we were middle of this huge bull market that started from March 2020. So, and this was so this pullback that we saw right here, this is when this huge bull run started. June 2020 was right here. Again, as you can see, huge pullback, bounce up, pullback, bounce up. Now that was right after pandemic, so a lot of different factors were affecting the market at that time. The lowest was about 296, highest was about right here 322. It's about 25, 26 point range, middle of the pandemic. Recovery from the pandemic, we saw about 14-point range, but this was a huge bull market, an uptrend. Now, come 2022, we are in a huge downtrend, almost 20% down from all-time high. Now, here, if we take a look at it, the lowest 364, highest for almost 420. Let's just round it up a little bit for calculation purposes. 365 to 420. That is about 35 and 40, 55 point range. Middle of the pandemic, we saw about 24, 26, I believe. Recovery during the huge bull run that we saw here, June 2022, 14-point range. And this month alone, we saw about 40 plus, as we just discussed. So what I'm trying to point out here is that this is very, very unusual market conditions. What we are seeing in this month is nothing that we have seen at least last couple of years since you guys started trading or following the market. You haven't seen anything like this. I have before, long time ago, 2015, 2014, and then back again in 2010. But if you just recently started trading, you haven't seen anything. But this is the June pattern. Usually we see a huge pullback and then market recovers a little bit and then something else happened the following month. Usually it moves up. But again, we were in a bull market. So now that we're in a bear market, we don't know what's going to happen. This trend line right here is still in play, is still intact until we break over that. We are in a downtrend. 50-day SMA is strongly pointing downside, 100-day as well as 200-day. All of the moving averages are going lower at this point in time. But June historically has been very challenging month that has seen or usually see sideways moves or tight range, or at least see a decent size pullback. And we saw that last year as well as during the pandemic, like right here. So that's almost always the case, and that's what you guys have seen. So far, from your experience, it comes back, bounce back, comes back, and then bounce right back. Same thing here. Where is June? Right here. Go up, pull back, recovers by end of the month nicely. That wasn't the case this time around. We moved sideways and then a huge pullback. But this pullback is not like what we see here. This gap downs right here are not giving us any chances to take advantage of this downside move that we did during the April, May months, because this was a gradual downside. So we took full advantage of this, and we had great success, 90% plus success rate. Come this month, we are not seeing that. It's just gapping down at the open and then trading a tight range. And even when you see these huge candles, I pointed this out during last technical analysis webinar as well. During that type of days as well, most of the meat of the move, as we like to call it, happens in first hour or so, and then it just moves sideways. We have discussed that at length during a technical analysis webinar. And quickly, for technical analysis perspective, next week, going into next week, we could see this downside is still intact. It seems like it's also forming this secondary trend right here that we could see at respecting. Now, this trend is not going to show as much of a strength or resistance at this trend, but it's still there. So keep that in mind as we move forward. This area 385 could start providing strong resistance now. It has provided support before, a resistance here before, as well as a resistance here before. So keep that in mind as we go into next week. But decent month, very challenging, as you all know. There were not a lot of opportunity presence, and it will be visible as we take a look at our trade log. All right, first I want to go into 2021 trade log. This was the back in 2021 June. Some of you were with us, some of you weren't. But as you can see, because we were in the bull market, almost every single position that we took was called. Even during that downside that we saw, the calls. So let's take a look here. This is June. Move up, middle of the move, probably second or third week, move down, and then slowly grinding up for rest of the month. So that was visible here. Solid green moves here, decent recoveries, decent returns on our investment. Same thing, but a lot of reds as well. Week 3 was okay, And then come week 4, that downside that I showed you, a lot of red trades here. And this was mainly due to market not recovering in time. And why am I showing you this? Because we took about 94 position, 75 wins, 19 losses. So a huge number of losses. And if you have a smaller account, you get stuck in one of these trades or two of these trades, and you cannot take any other winning positions. And people were not following stop losses as strongly as we suggest. But again, we were optimistic because we were in the bull market. So we did not follow stop losses. It continues to haunt us to this date as well. But we end up taking 95 positions. Come this month, crazy move, down, up, down, huge downside, bear market. All in all, we ended up taking about 75 positions. So a lot less than we usually do. If you guys remember last month's trade log, we took about over 100 position. Month before that, we took about 100 position. And this month, we cut it down to like 75. That's a 25% plus decrease in number of positions we took throughout the month. And why did we do it? Because we learned from the previous year. So every month, what I do is I go back to take a look at the trade logs from previous year for that particular month, or the previous year for that. I have trade logs going back, it's about 8 years now. So I take a look at all of it. I try to see if there is a general trend. Again, it doesn't always, history doesn't always repeat itself, but it rhymes. So it's not almost always going to be like this every single year after year, where we see a huge pullback and bounce back and all that sort of stuff. Or we trade in tight range, or we move sideways. It doesn't always exactly happen that way. But when we started this month, because we were in a huge downtrend, because how difficult June has been historically, we were on a defensive mode. So Admin H and I discussed this at length before the month started, defined our strategy, went over the results for last 8 years, and like, okay, this month, when this month comes around, we have to be extra careful. We have to stay on guard. No need to open 6, 7, 8 position in a day, as what you're seeing here, like 3, 6 position here, like insane amount of position we were opening. Look at this one, about 10 positions in one day. Granted, it was a good day and we only had one negative position. Same thing happened on this day. But now this day we had about 4 losing positions. Things starts to add up, right? So we were on guard. We learned from our mistakes. We saw what we did wrong last time around. So this time around, we were opening 1, 2, maybe 3 position at a time, but the third position would only be open if the first couple of positions the first 2 positions that are already open, we have sold half of it already. Then only we will open another 3rd position. So we took this extra precautions and put this extra defensive rules in place so that we do not repeat the mistakes that we did last year, and end up with like 20 something losing position. Remember, nobody is perfect, right? But our goal is improvement, continuous improvement. So that is our goal here at TRADEORE. That is my personal goal when it comes to trading as well. And that's what I urge you all to do it as well. Focus on improvement. Don't focus on perfection. Consistent improvement is greater than perfection. Perfection is a myth. Nobody is perfect. You will not find perfection anywhere. Imperfection, but continuous improvement is what you should strive for. And that's what we try to do here at TradeOre. And I personally try to do in my personal life as well. So goal this month was improvement from last year. And we did that. So we put extra precautions in place, extra rules in place, as you saw throughout the month, and it will be visible in TradeLog as well. And this is also why TradeLog is so important. We don't realize the benefits of it, and especially when market is not in your favor and you're making mistakes and stuff like that, or you're losing money. You don't want to look at your mistake. You don't want to look at your losses, so you don't write it down in TradeLog. But that is when you have to. That is because writing down your mistakes will force you to correct those mistakes. If you lose money and you move on to the next trade without taking a note of it, that mistake that cost you money, your hard-earned money, that made you lose all that money, that mistake will go on uncorrected, and next time you will do the same mistake with the realizing that you have done the same thing again. You have done the same thing before, and you have lost this much money before, because after a couple of weeks, you're not going to remember. How many of you remember your losing trade from last month, or list of mistakes that made you lose trade last month? Write it down, make a list of it, and focus on correcting one at a time. And that is how you get better. Anyway, let's take a look at the trade log first week. 3-day week, basically pretty good week overall. 3 losing trades, but we followed the stop losses, so 20%, 20%. Again, the follow rules here. So if you have a roughly $700 position, $10,000 account, you should not be taking that trade to begin with. So that kind of worked out. 3 losing position, but at the same time, we got 3 great 100% plus trade as well. That was a very, very good day, but overall, it worked out great. 3 losing trades. Week 2, week 2 was a little bit challenging, as you can see. Let's take a look. So this was, now you're focusing on June 2020. This was week 1, where everything pretty much moved sideways. Week 2, sideways, and then bam, it dropped like crazy. And that is evident here. Week 2, we started with like decent amount of position. Oh no, sorry, that is my bad. I'm gonna cancel that. First couple of days, we started very cautious because more market was moving sideways. This Microsoft position, we entered smaller size, and that is also another thing that you need to that I want to draw your attention to. I shouldn't have closed the other one, but look at the position size that we're taking the contract prices. A lot of smaller size positions rather than $10, $15, $20 positions. Because this is not the market to take that kind of risk. I used to buy $10, $15, even $20 positions that I have stopped doing for a couple of months now, because in this market, you don't want to take that kind of risk. But week 2 is 3 position, 2 position. It was all right. But once market picked a direction, as you can see, first couple of days, pretty much moving sideways. Right here, moving sideways, and then bam, all down. So once it picked up a direction, we put our foot down. We made good money in Google, Baba here. Roku also came out to play with us, and we made good gains there. But once direction was clear, we were still on guard. We were still not going all out or putting the hammer down, like I like to say it. We were still fairly cautious, but we were taking green trades. Google another 175% play right here. So decent return once it picked the direction, but when it did not have direction, we pretty much were on guard. We were a very small amount of position, nothing too crazy. Couple of losses there, but overall it was okay. But look at the difference between number of positions we are taking this month compared to where we were taking it before. Like this is what I'm trying to um, tell you guys that when market is tough, when market is difficult to trade into, don't trade the same way that you have been trading months before. Because if that's what you're doing, you are going to occur big losses. You have to evolve with the market. Your trading strategy has to evolve with the market. No one trading strategy will work in all of the different type of markets and market conditions. So you have to evolve with it. You will have to change with it. So before we were taking 10, 15 positions in a day, where we are taking about 12 or 13 position in an entire week. And that is the difference uh, between going all out in a bull market versus staying on guard in a bear market or market when it's moving sideways. But the decent week overall as well. Week 3, again, another decent week. This huge loss came in Google, and we saw that right here. So this was end of the week 2, and then week 3 started recovering, and that recovery happened like around 14. So let's say where's the 14? So we took put here, and then market just recovered from there. And even when it pulled back, it never back. This puts never recovered from that 1 day of upside move, and pretty much went to sideways. In hindsight, should have followed my stop losses, but we didn't. Took a big amount of losses. And this is another point that you guys need to keep an eye on it. Let's just say you're taking one call or one this column shows one contract profit and loss. So basically you took every single position that we took, but you took only one contract. This entire week's gain and plus more was wiped down by just one position. But if you followed the rules and if you avoid that position because your account didn't allow you to take it, you saved that money. This is what I mean by rules. And this is what I mean by following rules, and following stop losses will save you a lot of money. If you were to take this position, even if your account didn't allow you to, and it went to zero, you would lose entire week's profit in one trade. So if you look at your profit, your success rate percentage, it may be like 98. But if you look at your profit and loss for that week, it will be zero or maybe negative. So you have green consistency, or number of trades that you taking are 90% plus success rate, but you're still in loss. And then you will ask, like, how did this happen? I'm taking 90% of my trades are successful and I'm still in loss. Because you're not following rules. This is why the rules comes in place. This is why rules will save you. And what in your account, so that it makes sure that if you follow the rules and if you're successful, your success rate is 80% or 90%, you end up making profit and not in loss, because this is the kind of loss you want to avoid. One big loss wiped out entire week's profit. And that is the kind of losses you want to avoid. For me personally, it wiped out about 40% of my profit for that week, which is still pretty significant. But it wasn't devastating as it could have been if I were to trade with, say, $10,000 account or $5,000 account per se. So please, please, please be careful. Keep these things in mind. Follow the rules. Otherwise, you will end up in trouble, even if you are having great success rate percentage wise. Week 4 was a short week, 4-day week. Again, we did pretty good. But another thing that I want to point your attention to is how many times we have exited a position once it started getting crazy right here. So this was week 2. This was when this downtrend and all this craziness started. Look at the number of times: 9%, 5%, 15%, 0%, 14, 0, 6, 11, 16, 2, 0, 0, 0 again. How many times we got out of position, break even? That is another thing I want to put your attention to. That was one of our strategy that we employed this month as well. And that was to take what market gives you. And once you see that your position is struggling, get out. Even if it's a 0% gain, get out, right? Because in this market, you don't hold and hope. You don't hold and hope that your position will recover or go back up. And almost every single time that it has went down, and we put this in the room as well, that hey, this position went down 20%. It's near break even now. This is your chance to get out. Every single time that has happened, we put that in the chat room as well. So that is your signal that, okay, this position could be in trouble. So if you have 2 calls or 2 contracts, sell one. Why are you holding your entire position? If it's down 10% and you see that market is going into other direction, or the position you are in is struggling, a lot of time we take trades on, I personally take trades right before it breaks out over a certain level and then it's having trouble. So I get out of the position. I get out at 0%, or depending on what kind of day it is, I get out at 6%, 7%, 15%, 14, 11. Profit is profit. You get what market gives you. And this 9% and 5% is also a good amount of profit. It will add up at the end of the day. Those profits will add up. So you don't necessarily always have to wait for 25 to 30%. Read the market condition. That is the most important things that I'm trying to point you out. All the strategies that we employed this month were based on the market condition. Once market gets better, things will change. You will not see 0% exits that often. You will see more trades per day. All that will happen when market allows it. Right now is not the market where you want to take your chances. So we don't. We get out. We're like, okay, live to fight the other day and just get out. A lot of time, like if it's closer towards the day, we get out and we'll revisit the next day, because look at huge market range. It opens here and then it goes insanely up and it goes insanely down the next day. It's like crazy. It's all over the place. How do you trade that market? This is how you take a position. If it works, you book your profit, you get out. If it doesn't work, you get out at break even when you get a chance, or 5-10% loss, you get out and then you revisit it the next day. That's how you trade. But yeah, so pretty much week 4 was a decent one. Lot of Friday call. Trade didn't work out. Went to 0 again. It's a lot of Fridays, so kind of expected. Not a big deal. It's all good. Week 5 comes and we have that was the last week, couple of losses. Again, we saw a nice green day here. And it did try to bounce the next day, but failed, didn't break down much. Again, tried to break over, failed, and then pulled back significantly. So this Microsoft position that we took was on the break-even day where it was pretty much didn't do much. But once it started pulling back, it pretty much never recovered from that slump, and market ended up going down a lot. Same thing happened with Tesla as well. It was moving higher, um, but I mean it was moving lower, but it recovered and then just ran up like crazy over 700. So this 660 put gave us about good profit here. The 700 put gave us good profit here as well. So but the 640, the third time that we entered last week, failed, and it went to zero. I do remember putting a note that said that okay, the size is small, keep the size in check, and all that sort of stuff. But it did go to zero. So 2 losing trade on that day. I mean that week, but overall, another decent green week. If you were to take every single position, one contract, you would have still end up with 1,200. But look at what you would have end up with if you took if you follow the rules and only take positions that were lower than 700. Now, let's just say you missed after all this position, you missed to say all this three or a bunch of them. Let's just say you missed half of them. You still end up with 3,000 profit. On a $10,000 account, 3,000 is 30% increase in your account size in a month. Let's just say you ended up with, you missed all of it, or you took big losses here. You still end up with $2,000 profit. That's $4,000 loss less than what we're showing here. That is still 20% increase in your $10,000 account size that you can go into the next month with. So the point I'm trying to show you here is that rules help you become consistently profitable and will save you from this huge losses that occurred here if you didn't follow the losses. That's what I'm trying to bring to your attention here. Success rate, we took, all in all, we took 75 trades, 66 wins, 9 losses, 88% success rate, 12% losses, which is still, given the market condition, 88% success rate is pretty fantastic. If you ask me, compare that to last year, 75% success rate. So we are, or 78, I don't remember exactly. So the rules that we put in place, because what we learned from previous year alone, show us this much improvement, where we went from 78% success rate to 88% success rate, and fewer losses, and lower profit, but that is not the focus here. Focus is consistently profitable. That's what we are trying to achieve. Oh yeah, sure. If you want to put that. There you go. Okay. And that is pretty much the end of the trade log review here. Um, any questions you guys want to ask, feel free to ask now. All right. All right. We do need to announce um, the trooper of the month, but we haven't collected the data just yet. So we will announce it after this meeting ends. But one thing that we do want to announce is that this coming month may be the last month we do Troopers of the Month contest. And the reason being, one of the main reasons we started this contest was to encourage engagement between the users. We wanted to see you guys provide input, show your successes as well as your losses if those occurs as well, or just talk with each other, provide your input, share your trades, share your chart, share your ideas, ask questions, be engaged. And one of the main reason we wanted to do that was because one of the reason we wanted to do that was because um, we personally believed from our experience that engagement, once you're engaged in um, stimulating conversation, um, that's when you become the best version of yourself. That's when you learn something from other people. That's when you improve your trading. That's where you correct your mistakes. That's when the magic happens. That's where we found in my personal trading journey, that's when I started realizing the mistakes I was making. So rather than stewing ideas and thoughts in your head, you share with people, and people provides you feedback on your ideas. And so the constructive conversation was the idea behind starting the contest. A little bit of it's not big, but it's a little bit of incentive for people to be more involved rather than just sitting behind the desk, behind a username and just following the trades and just being by themselves. We wanted you all to be more inclusive, more engaged in the community that we are trying to build here. That was the idea behind it. But we are not seeing that big of an improvement right now. So we will give it another month and see how it goes. But if the same thing happens again, then we may have to come up with something else, or um, I don't personally don't know yet. But hopefully, um, hopefully things will get better. Our intentions here has always been help you guys out and to make you a better trader and obviously make money as well. Um, but we are using all of our learnings from our experience and trying to instill those learnings in you. And one of those was to be more inclusive and not be someone who's a shy kid in a classroom who never says anything. Um, and 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 that was the idea behind it, basically. So we'll just give it another month and see what happens. And if we see the similar results, then we will go ahead and try something else. But the Troopers of the Month contest will end um, starting following month. And that was a little bit of announcement that we wanted to make. And we will do a short video. We'll do the short video of Troopers announcement, Trooper of the Month announcement, and do and a video of the name when we pick it. So stay tuned. We just weren't prepared for it, so I apologize for that. But that's it for today. Do you guys have any questions? All right, and now we're not closing down the service, just a contest. All right, guys. If you don't have any questions, then we will go ahead and end the meeting here. And the, yeah, no plans for the weekend just yet. Probably going to spend it with family, beach days. That's about it. And do some more research, market research, like always over the weekend. That happens. But beside that, no plans yet. I hope you guys are enjoying your long weekend. One of the reason we did it on Saturday instead of Sunday so that people can enjoy next 2-3 days without having to worry about a meeting. Yeah, we'll do that. All right now. Okay, everyone. Hope you guys enjoy your long weekend, and we will see you on Tuesday. Have a great day, and thank you again for joining.